Welcome everybody. This is the Thursday evening Viper Trading webinar. If you're here to learn about trading the futures markets using the Viper's tools, you are in the right place. Tonight's topic is confidence, fear, and losses. So we're going to jump right in and start to talk about those right away. But first we got to get our standard disclaimer out of the way. Let's take care of that. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there's a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. Oh, excuse me. Of course, everybody here does know that you do trade at your own sole discretion. I got to take a sip of tea and wake up here, huh? Drink some coffee. All right, so let's do this. Let's get over here. I want to jump right in and talk about some things. But first, I'm going to take a quick poll of the team. Before we jump over, or as we're jumping over to screen one. Okay. All right. So let's get over to screen one, and should look like this. All right. So what I like to do first, here's how we're going to start off. I'd like to first of all find out from everybody if you could just take a minute and type in what instruments you trade. Just go ahead and type them in. And no particular order. You know, if you like gold, put in gold. I mean, if you like the currency, 6E, put in 6E, whatever. If you like the NASDAQ, just go ahead and put in the instruments you like. What are you trading, everybody here tonight? What are you trading right now? All right. I see him coming in. I see him coming in. I get an interesting mix. Some crude oil, some NASDAQs, David, Tom, Lee, NASDAQ, YM, AMD, 6B, and 6E. So that's 1, 2, 3, 4, 5 instruments. Interesting. Sometimes NQ. Too many. CL, YM, and TF. Several people have 4, 5, 6 instruments. Some people are mixing in gold. All right. Second part of the question. In regards to the instruments that you are currently trading, how are you doing on each one? And how do you know? Good, bad, making money, losing money, struggling, breaking even. I'm talking about on each one of the instruments that you trade. How are you doing on each one? Stick with me here because I'm sort of building a little foundation for everything we're going to cover tonight. So I'm just starting with the basics. So struggle. Okay, good. Learning NASDAQ, EMD, good. 6B, okay. ES, not good. From Joseph. Hey, Joseph, welcome. You're on the trial. Making money a little bit. Better on YM than NASI. Still trading demo in all of them. Coin toss. Wow, coin toss. Okay. All right. Okay, so here's what we need to do. And I've covered this before, but I'm going to do it quickly again because what we need to do is we need to track how each one of our instruments is performing in regards to our trading. So, for instance, if you, let's pick out, some people are saying crude oil, whatever it is, crude oil, NQ, YM, Russell, whatever those instruments are. If you're trading them all in Sim 101 account, whether it's demo or not, or however you're trading them, they're all going to get dumped into Sim 101 account. Okay? And it's going to be very difficult to circle back at some point and find out how well you're doing on each one. That's why I asked that question. I said, you know, what are you trading? And then you all list out what you're trading. And then the question was, well, do you know how specifically you're doing on each one? Some of you did, most of you didn't really. So here's how you can do that, okay? Go into your control center, and some of you may have already done this, so just stick with me. You go into Tools, you go into Options, and in here you're going to see the Simulator tab, okay? Simulator tab, all right? Some of you can do this right now if you want to, if you're logged in, or you can just watch this recording again or write it down or however you want to remember to do this. So on the Simulator tab, you're going to go into Accounts. Now what these do is this creates separate simulation accounts, okay? So what we're going to actually do, if you want to sort of step back and look at the bigger picture of what we're doing here, is we're creating separate sub-sim accounts to track your performance on each instrument separately. Now, in here you can give these sim accounts any name you want. Let's say that you're trading NASDAQ and you want to trade NQ, track the performance of NQ separately. You could simply type in NQ. You could hit save. I already have one called NQ, so I can't do that. It will save it. Here, let's just make one up. Here, let's do this. Let's make a crazy one up. Let's go, I don't know, let's go ZZZ, manual, I don't know, NQ. Save. Now, it's going to say new sim account, ZZZ manual NQ created. It will be effective next time you connect. So now when you create these separate sim tracking accounts, you can't start trading this until you log out and log back in, because what it'll do, it's created a placeholder for it, but you can't trade anything to it, okay? And then so for whatever instruments you want to track separately, you would continue to create more accounts. So, you know, maybe you create ZZZ manual YM, etc., etc., etc. for all your instruments, okay? Just like that. Now, we're going to close out of there, and we've created a separate sim tracking account for each instrument that we're trading, right? Now, how are you going to track your performance on each of these? Well, what we're going to do is we're going to go over to the Accounts tab. Let me show you some examples. On the Accounts tab, I'll just, here, I have a whole bunch of sort of dummy ones I did just to show you, okay? Just to show you how you track this. This is just a bunch of dummy ones I threw in there just to show you how this works, okay? Ready? Okay, here we go. Now I'm on the Accounts tab. Hey, Mark, welcome. Bunch of people still coming in. Don't worry about it. It's okay. This is recorded. We'll have it up tomorrow. You haven't missed too much. You know, we're a couple of 10, 15 minutes into it. All we did was set up some sim accounts for everybody to track their performance separately on these instruments. Now, I threw a bunch of dummy ones in here. So when you go to your Accounts tab, now why is this important? What does this have to do with anything? Well, as you start to trade each of your accounts, say you're trading 6J, you're trading gold, nat gas, YM, whatever you have in here, as you trade these, it's going to log your performance on each trading account to each of these separate accounts. Now, here's what I'm going to suggest. For those of you who are struggling on some of the instruments that you listed, I'm going to suggest this. For each day over the next, say, 2, 3, 4 days, I want you to go in and pick out one of those instruments that you want to trade exclusively. Now, you can have the other charts up, okay? Whatever you have listed, you know, go ahead and put, you know, if you like YM or gold or crude, just you can have all your other trading charts up. I'm not suggesting you change or close anything. If you like what you're set up, if it's good for you, leave your setup alone. But here's what we want to do. We're going to go in and we're going to look for good setups on each of these instruments one at a time and focus. So for instance, let's say tomorrow one of your instruments is NASDAQ. And over here you created some sub account called, you know, whatever, manual NQ, whatever it's called in here, okay? And then I want you, each of us here tonight, this is our goal for the next, say, 3, 4, 5 days, right, into next week, tomorrow and early next week. Let's say Monday you trade YM. I'm just making stuff up. Whatever, however you want to do this. This is how you're going to track how you're doing, right? And then say Monday is crude oil, and then if you like it, whatever else is left on your list, Tuesday is the Russell. Now, come Tuesday, you can come back to this tab here on accounts. It will show your demo sim accounts here, right? And it'll show each realized under here, up 100, down 300, up 250, down 150. It will all show you right here how you did. Okay? Now, why would we do something like that? Why are we doing this? Why would you separate all these different instruments out into separate accounts and then treat each one exclusively each day and look for entries? Why would you do that? And so here we are next Tuesday or Wednesday. You have all these separate accounts. All the results are shown right here. What is this going to tell us at the end of this little exercise? What will these results tell us in here when we get to that point? If you choose to do what I'm suggesting, which I strongly urge that you do. If you want to turn your trading around and start making some money, this is the good first step. Yeah, it'll show how good you're doing on each one. Exactly. Right. Each one of these little results in here will tell you how you did. So for instance, let's say you had a YM one that you created, whatever it's called, right? And all you go in and you think in your mind, you say, well, you know what, I'm pretty good at YM. I think I'm pretty good at trading YM. I feel like I make money almost every day trading YM. And you go in there and you look at it, and I'll be darned, you're down $200. What happened? Whatever, you know, maybe you didn't, you never thought you did that well on NASDAQ. You go log back in and you're up $300. Everybody see that? It's going to tell us if there's the difference in your trading of different markets. That's exactly right, Michael. Yeah, I strongly urge everybody to do this step right here. Okay, now if you're using Object Trader, here's how you engage your separate accounts. Okay, this is how you're going to do it. Okay, see this NQ chart with the OT over here? Okay, now here's what's going to happen. When OT is logged into the Sim 101 account, it has this sort of lighter opaque color to it. Can everybody see this right here, over here? See, this is how it looks when you're trading in Sim 101 account. Okay, let me show you what we're going to do. Now, in the future, when you engage OT, and I'm going to show you this right now. You click on Object Trader. Give me 1 second, please. I'm trying to load this up right now. It's giving me a little bit of trouble. Why is this doing this? Give me one second, please. I'm trying to apply this and get this set up properly. I think I'm getting this right now. Okay. I'm pausing the screen. I'm going to unpause the screen real quick and show you how to do this, okay? Okay, focus in right here. So what I did is I right-clicked on the screen. I have highlighted the OT strategy. Inside of here, you have to select an account. So I call mine Manual NQ. Manual NQ. So this is the account that you created. So we created the SIM accounts to track them separately, right? We logged out and we logged back in. So we logged out, we logged back in. So these accounts now exist in our account in this drop down here. All those accounts are in there. Now, if you're trading NASDAQ, you're going to pick whatever you called it, Manual NQ. ZZZ Manual NQ, whatever you called it that you want to track, you have to make sure you select that and you apply it. Oops. Enable true, apply. Now, the one difference is it's going, and don't freak out about this, it's going to be that different color of green, which normally implies that you have a live account. But in this case, you know that you don't because you selected the sub-sim account manual NQ or NQ or whatever name you gave it. So now, whatever trades you take on here, right? Long, short, whatever, you know, reversals, box trade, bar flips, will now all be registered to that individual account, whatever you selected. Does everybody see that? If you're using Chart Trader, you got to do the same thing. However you get in and out of your trades that you're tracking, you want to make sure that it's logged appropriately to that account. Does everybody understand? Everybody see what we're doing? Any questions on that? If there are no more questions, I want to move on to the next topic. All right, let me put this back to Sim 101 so nobody's confused. Let's go back to Sim 101 so it shows the opaque color. The other thing that came up, and these intertwine with each other. They may, on the surface, not seem like they're interconnected, but they are. Let me tell you what they are. How many of you here have taken some losses in your trading? How many have taken losses in your trading? Talking about losses. Many. Yes. Who hasn't? Me. Always in Sim. No joke. Jaboom. Yes, many losses. Okay. Now, would it be safe to say that these losses have affected your ability to have confidence in entering trades? And you feel a little skittish. And so as a result of feeling skittish, you hesitate to get in sometimes. Sometimes you need to see more, how would you say, evidence that a trade is coming in. And so what happens is your fear of loss is holding you back from those entries. And as a result, you get in late. And it seems like every time you get in, whether it's in Sim or real money, the market immediately pulls against you. And the compounding effect, because you have fear of loss, causing you hesitation to have confidence to take the entry, then it compounds itself because now you're late and it starts to pull against you, and then you get negative thoughts in your head and you start saying, man, this market always knows when I get in and it always pulls against me every single time. And then to make it worse, the fear of loss kicks in, you feel nervous, and you want to dump the trade right away because you're down. Is that describing anybody here tonight? My worst problem. Absolutely, for sure. That's so me. I'm great at pushing the button, just trying to do it at the right time. Viper's starting to help me figure that out. I feel like couple weeks and then I dump it all. I do well for a couple weeks and then I blow it all. I found the market has been up for 515, confident in entering a poor position. How do we fix this cycle? How are we fixing this cycle? It doesn't drive you nuts that you get up and you do it over and over and over again and you feel like you're in a rut and you can't get out of it? The same thing every day. It's like, what was that movie? Groundhog Day. Or First Dates, 50 First Dates. You ever see that movie? That's a great movie. With, what's his face? You remember that one? 50 First Dates? That's a great movie. Groundhog Day, where he goes through the same thing over and over again. Adam Sandler. That's right, Adam Sandler, 50 First Dates. By the way, that is a really funny, cute movie. If you haven't seen it, it's a really good movie. That one and Groundhog Day. Funny movies. Anyway, the point of that is that very little or nothing is changing from day to day. And so you're not, unless you make some changes, you're never going to get over this whole confidence, fear of loss, entry issue. It's going to continue to just sort of seethe in the background and never get fixed. Yeah, Lucy Brown in the football, Charlie Brown and Lucy in the football, where he kicks it every time and she pulls it out. How are we going to fix this? Well, you've already taken the first step. The first step was already taken here when you created these separate sub-accounts, right? You created these separate sub-accounts, NQ, YM, whatever, manual, whatever you call them. You load them onto your chart, however you trade, whatever you use to trade, you load them on your chart so you start tracking them separately. So then you can see how you do each day. Now here's what we're going to do. This is what we talked about doing, right? Let's say hypothetically there are 3 instruments in your list. And I'll just pick 3 randomly. Crude oil, YM, and NQ. Okay, they could be anything. Now tomorrow what you're going to do is you're going to select one of those. Let's say it's NQ. Now, and make sure you roll these, okay? These are all June. All the equities are June now. Make sure you roll all your equity contracts to June. All June tomorrow. Or your broker is going to give you a little call if you start trading that March contract. And what I want you to do, everybody who wants to do this for the next week, and we can track this until next Thursday, and we can circle back and see how everybody did if you want to. You can absolutely do that. In fact, let's do that next Thursday. We'll set this up to do this again. We're going to look back at everybody, and we're going to see how you did. So tomorrow we're focusing only on NQ. We're not going to trade the other charts. And we're going to do this. In our little separate sub-sim account, we're going to look for ultimate good entries, just on NQ, nothing else. If that's your chosen instrument, okay? It could be anything. At the end of the morning, and here's what I'd like to do. Here's a further suggestion. You can do this any way you want. I've just spoken with several traders who are going to try this very idea in order to help with the confidence, entry, fear of loss issues. When you take those trades, you're looking for good entries. Because let's face it together, okay? Let's face it. If you can't get good entries, then the rest of it really doesn't matter, right? The rest of it, your targets and your stops and the fear and the trailing thing and all the manner of running trends and all that sort of stuff. If you can't get a good darn entry, the rest of it doesn't matter, because you're always fighting that fear of loss and the pullback against you, and you're going to get stopped out and you want to get out. You've got to get through that. Now, and the other thing is this. Even though you're trading in a separate sub-sim account, and this is hard to do, but you've got to try to do it. You've got to treat that sub-sim account like it's your real money. So, hypothetically, you get into a trade. It moves in your favor. You feel some euphoria. Here, let's pick something out here. Let's pick something out that didn't work out and talk about it for a second. Let's pick one that didn't work out. I'm just going to make something up here, okay? So we can discuss this whole fear of loss thing. All right, say that the trend was up over here and you're getting long, okay? And you're looking to get long, and you know, maybe you had something boxed in. I don't know, I'm just making this up so we can talk about this. I don't know, maybe you had some kind of mid-band box in here somewhere, okay? I'm just talking about how you feel. Now, here, what I want you to do for a couple of trades, everybody, if you can do this, okay, is when you take a box trade, you take a ray trade, you take a bar close trade, however you, by hook or by crook, on your chosen instrument, and you're in. Let it move around a little bit. Maybe you keep it real simple. Maybe you just put a 12-tick target and a 12-tick stop, and you don't touch it on your chosen instrument just for that whole session, right? Let it move around and see how you feel emotionally. Pretend that that's your real money, that you really took that trade. You get the bar close up. You feel a euphoric feeling when you get up a few ticks. You feel a little sick and nauseous when it pulls against you. You feel pretty good again. You feel relief when it goes back in your favor, close to your target. Doesn't get your target, misses it by a tick or two. You're frustrated. Pulls back, comes down, and stops you out. Now, let's talk about this for a second. How do you feel about this emotional roller coaster in here? Not good. Huh. Parts of it are good, but a lot of it is not good. So how are we going to fix this? What we're going to do is we're going to work on each instrument to determine how good you are at taking these entries. And your log is going to tell you the answer to that at the end of this exercise in your accounts tab, right? it's going to tell you how well you did. When you circle back over to your accounts tab here and you look at your realized results on each one, you're going to see how you did on each instrument for that day, right? Now, after you practice taking those entries like this throughout the course of the trading session, and you're treating that sim money like it's real, okay? You want to feel that real emotion. Then you want to start to counteract the emotional feelings that you have. You can adjust your target. You can adjust your stop. You can start. I would suggest taking a couple and let it move around a little bit, just to get a feel for how it's affecting you personally. This emotional sort of roller coaster when you take these trades, right? And then start making adjustments to your entries and how you're going to manage your targets and stops. Start making subtle adjustments. Is everybody following me? Any questions? Everybody see why we're doing this? Lee says, I feel horrible. After the first drawdown, I would have immediately closed the profit level regardless of the trade potential. Right. So you're choking off the runners. You're getting stopped out because you get in late. You get afraid. You jump out quickly. The thing runs. You kick yourself because you missed it. And then the cycle repeats itself. I always feel like I should have taken profit, then I end up with a bunch of 5-tick trades. Well, subtle adjustments, what I'm talking about, Tom, is if you follow my suggestions in this exercise for the next few days, where you select each of your chosen instruments and you track them separately on the accounts, is that in the beginning when you start to take trades early and you're treating this like serious money, go ahead and take a trade entry, bar close, box, however you get in, and then just let it move around. From what I'm seeing and what I've heard in talking to so many traders, that there's so many, the market will move a few ticks up and down and a few ticks up and down, and it's like toying like a cat with a toy, playing with your emotions like that. You have to sever that connection. Okay? You have to sever the connection of feeling this euphoric feeling when it goes up and this feeling of despair when it goes down and you're long, right? I got to tell you, I've taken so many trades over the years right now. I told somebody this morning, I said, I'm almost numb. I don't feel anything. It doesn't matter to me anymore. After so many trades, it goes up, it goes down. Some of them I know are going to make money, right? It's easy, really, if you think about it. Some are going to make money and some aren't. And you just have to come to accept that. And don't let it play emotional roller coaster with you. That's no fun. You get done at the end of the morning. I remember those days. I was exhausted. I felt like I went through a 15-round boxing match. I was exhausted after chasing the market around, getting beat up all morning. So what you want to do is ease back on yourself a little bit. Look, the market's going to wiggle around, right? Some of these trades are going to go up and they're going to hit your targets and go on, right? And other ones aren't. That's just the way that it is. It'll always be that way. So what we're going to do is we're going to do certain techniques here to get you through the confidence, fear of loss issue, right? Get you through that. So tell you what, here, let me tell you something. I know where everybody's at. As good, I think, or anybody in the planet trading today. Let me tell you a quick story. I got started trading in '95, right? I was with a company, went public, sold the stock options, made some money. Okay, so I got into options. I liked options. I liked stocks. I started getting into that whole thing. So I put some capital in a trading account, flew down to, this is well before Viper. This is 22 years ago. Quick story. We didn't have all this technology and this software you have now. Your Reed Scalpentinis, I don't know if anybody remembers that on stock, Scalpentinis, back when it was 16th and not a penny. And we just read candlesticks. It was really crude. Anyway, I flew down to this company in LA. They did some training. I spent a few days down there, and they did all this training, set you all up with everything. I'm so excited. I got my machine. I got my screens. Accounts all set up, ready to go. I'll never in my life forget this. I take a long, and this is, I don't know if you remember back then, this was the high-flying internet stock days, right? You had Yahoo, Xilinx, Apple was still trading back then, but they were extremely volatile. They could go up a couple of 3-4 points in like minutes or seconds, and they can go down, bam, 10 points, just like that. So you got to be on the right side of the trade. Anyway, long story short, I pull the trigger, my first trade. I get long on Xilinx for 1,000 shares. The thing goes up a little bit. It's kind of like this right here. You see this? It was just like this. It was just like this little thing, just like this right here. Went up a little bit. I'm up a little bit. I'm feeling good. I'm feeling good. And then bam, bam, it drops 4 points in like seconds. I was down $4,000 in like a minute. Yeah, that was my first trade. My first ever trade. $4,000 in like a minute and a half. Bam, just like that. You think I didn't have a little fear of loss coming off of that? Yeah. Yeah, that'll create some fear of loss. It took me a long time to get over that. So fortunately, nobody in here has to go through any of that. We have all the tools. There was no live trading rooms back then, so it wasn't futures. It's not here where you know what you're trading. It was a high-flying, high-risk, high-return kind of deal. So the thing is here, you don't have to go through all that, right? We know what we're going to trade. We're not trying to surf around for high-flying internet stocks, so it's completely different. You know the instruments you're going to trade, right? You know the methodology. You have the tools. We know the setups. So look, if you've lost a few $100s or even a few $1,000s, that's all in the past. You have to let it go, right? You got to let it go. For you to go on to be a successful trader, you've got to let those losses go. They're done. They're gone. You're never getting it back. It's all in the market. It's never coming back, and you can't change it. You got to accept it. And then you got to, and then I know that's easier said than done, okay? Having been there, I know it's easier said than done. But if you can't change that, it's going to affect you for a long time in your trading. You have to make some changes and let go of all that stuff. It's done. That baggage is finished. Now look, the other thing that happens all the time is this. I hear this all the time. You know, Charles, I see this was in a powerful downtrend, and I see it came close to the midband and rolled over, but I missed it. Or I see it came down and I should have let it trade both ways, and I boxed it and it dropped 20 ticks and I missed it. Here's the thing we have to all come to accept. We are all going to miss trades, no matter how good you are and how good your tools are. You're going to miss them. So don't feel sick about it. I mean, so many traders I talk to, like, oh man, I missed the trade of the day. That thing dropped 40 ticks and I missed it. And then it came in and I caught a couple of scalpers at the end for 20 ticks. Well, be thankful for the scalpers you caught, right? You're not going to get them all. But I'll tell you what's going to do this. When you start to do this separate account thing and you pick the separate account, I'm not going to go through it. You set all them up. You tie that into your chosen instrument and you focus just on those setups only. If you have said, I'm going to trade only NASDAQ, then you want to perfect your entries on NASDAQ only. So if you're in the live room and your chosen instrument is NASDAQ and somebody makes a YM call, do you care about it? Do you care about it? You've decided that you're only trading NASDAQ, but you're going to watch YM and crude oil or whatever other instruments you like. You're watching those charts, but you're not trading them. You're focused solely on NASDAQ, and a crude oil or a Russell trade call comes in. Does it have anything to do with what you're doing? No. Absolutely nothing to do with what you're doing. So what do? You ignore it. Right? Okay, so we have a term for that. That's called selective listening. Selective listening. That means that if it's not related to the instrument that you're focused on, you let it go and you don't listen to it. It means nothing to you. You don't go over and start, you know, Gary or myself says something about crude oil and crude oil's coming up to a resistance and we're getting ready to short it, whatever the scenario is. You don't rush over and start looking at crude oil and abandon your chart that you're trading. Don't do that. It's those distractions that are causing you to miss good trades. I can tell you for a fact. I don't even have to sit there and look at your trading. I can tell you for a fact that's what's happening. You're distracted on other things, trade calls, charts, dog, cat, breakfast, coffee, TV, all manner of things are distracting you. And the trades that are making you money are coming and going, and they're coming and they're going, and they're coming and they're going, and you're missing them. You're getting in late, you're stopping out. You're missing them. You're getting in late, you're stopping out. Repeat the cycle. You've got to break the cycle. You've got to start doing things differently. You've got to get focused. Now, what is the purpose of the trade room? Say if Gary and I say something to the effect of, you know, if NASDAQ gets anywhere up around that 64 and a quarter, I'm going to look for a rollover to take a short. What is the purpose of the live room? When I say that, or Gary says that call, that observation or call or whatever, am I calling out, are we calling out your trade, or are we calling out our trade? Think about it. What trade is being called in the room? What is the purpose of the live room? Is it for us to spoon feed trades to everybody who's in there? Is that what it is? Is it to call out trades so you can go take trades? Is that what it is? Or let me put it to you a different way. Wouldn't it be better if you were focused on a chart like this one right here, and that before anybody said anything in the live room about NASDAQ, you had somehow already identified the fact that after this drop right here, you were looking for a short on a retracement up into here, you yourself on your own chart, ahead of anything being said in the room. That's the purpose of the room, by the way. It's observations of what's happening in the market and suggestions on potential trade entries that you should consider to reinforce what you should have already seen in the first place. Does everybody follow what I'm saying? There's always confusion about that, especially with new people. Well, you're supposed to call trades for me. That's why I go in there. You call the trades for me. Well, if that was the case, why have any training? Right? Why do any training? We shouldn't do any training. We should just everybody call them in the room and we will call every trade and you just take whatever we tell you to do. Right? We just tell you what to do. You don't have to think for yourself. We'll spoon feed it right to you. Just like my 2-year-old granddaughter. I'll get a little spoon and we'll feed it right to you. There you go. Here's your trade. Now, would you think that waiting for some call in a room might also be contributing to the fact that you're getting in late? You think that might have also something to do with it? The fact that it's coming up and hitting and you haven't diagnosed it properly yourself because you're distracted? You're looking at other things and you're missing it? In the very area that we say we're getting in, it comes right to it, and by the time you notice it, the bars are down here. Oh, darn, there I did it again. Now look, I don't mean to be a jerk or anything. I hope nobody's taking this wrong. I'm not trying to be rude or spook or scare anybody. I know I'm sort of handling this webinar a little different than I normally do, but I just felt like so many traders I've talked to about this very issue, and it never gets fixed. It never gets addressed. It's swept under the carpet. Nobody talks about it. The next day comes, and the next week comes, and the week after that, and it's the same thing over and over and over again, and it never gets fixed. If I'm telling you right now, if you want to fix this problem, I would strongly, strongly urge you to do exactly what I'm suggesting. Right? Set up the separate accounts. Take the time to do that tonight. Just do it tonight. Set them up, log out, and they're ready for you in the morning. Right? Put your object trader, the tools that you use, put them right into those accounts. Set up all your charts ahead of time. Go in there and make sure that the object trader is tuned to the proper account. Pick one instrument tomorrow and just focus on those entries. Because here's where this is all going. If you want to follow this right to the end, I'll tell you what the end game is. The end game is this, is to try to get you live again and try to get you making money. Right? And the way you're going to be able to do that is you're going to be able to go into those accounts, you're going to see what instruments you made money on, and you're going to start to wean yourself away from the ones that aren't making money, because it's no good sinking more time and effort into instruments that you can't make money on. You're wasting your time. It's distracting you. You get focused on the ones that are, and then you get your win rate on the entries up to around 60, 70, 80%. And furthermore, you are seeing the entries yourself ahead of time before it's ever called in the room because you're so laser focused. Trading is serious business, okay? It's money. It's your future. It's your accounts. You know, I've heard stories, you know, traders put trades on You know, maybe they have targets and stops, maybe they don't, and they just disappear for 10 minutes and go get some coffee, right? Yeah, don't do that. You know, how would you like it if you were in surgery, in major surgery, you know, heart surgery or whatever, and the doctor decides, oh, you know, I'm pretty thirsty. Maybe I'm feeling a little tired. Maybe I should go get a shot of espresso. I'll be right back. Right? No. You think that surgeon isn't focused 127% on you and your heart surgery? Yeah, that's the way you got to be. That's exactly the way you got to look at it. Because I'm telling you what, all the other traders that are doing that, you think the software and the algos and the scripts aren't doing that? They're not taking breaks. They're not getting distracted. They are laser focused. All right, any questions? I'm going to move on. Any questions on what I just talked about? Questions on what I just talked about? Here again, I apologize. I didn't mean to come off as too harsh. I didn't mean to, you know, spook or scare anybody. I'm not telling you what to do. This is your money. This is your account. You can do whatever you want. You can choose to ignore everything I've said for the past 45 minutes and just say, okay, Charles, whatever, and do what you want. You know, seriously, you can absolutely do that. But, you know, I have to word of caution. Come next Thursday, we'll be sitting in here, and you'll probably be in the same state of condition you were at today if you don't start making some changes, right? All right, let's clean this chart up here. What do we want to talk about? We got about 10 minutes left. Let's try to squeak in a couple other topics in here. Let me clean this chart out. Do we want to look at some trades from this morning? You want to try to look at what's happening right now and look at some trade setups? NASDAQ's still heading up here. Tom says, I needed this. Peter says, you were very quite clear. Well, sure bet. Yeah, there's been some good moves this week, and we've been able to leverage ourselves and make good money on them. And they're not all like that. I mean, the days that are moving very nicely, you've got to take advantage of. Okay, when the market's running and it's running and running like today, you know, we just had these massive moves. We just had these huge moves. Or moves up, they run it up, and they run it right back down, and they run it right back up. These are the times you got to make money. We got to make hay, because it's not too long. We're going to be into May and June, and then we're in that summer choppy crap again, all due respect. And you're fighting your way around to scrape out 5 or 10 ticks. This is the time where you get the big runs. We got to make the money in the spring. Okay, Peter, that's a good way to do it. JC, most of the time I get stopped out. Hey, JC, do me a favor. Type in a little more specifics about why you're getting stopped out all the time. I'm guessing the stops are too tight. By the way, another quick question. How many of you wind up make a little bit of money early in the morning, and then you get stuck in some chop and you give it all back and go home with a loss? Is that anybody in here tonight? Why do you think that is? I'll tell you, I was talking to a trader the other day, and I said, you know what? Here's the simplest thing you could do. Here's the simplest thing you can do. And I went through all suggestions I just said. Separate accounts, picking the instrument, focusing on one, not on three. Everything we just talked about was exactly the same. So what if you did this? You said, okay, I'm going to try to make $100 a day for 5 days. I'm going to make $100 a day. At the end of 5 days, I want to have $500 in my account. I don't care what instrument it is. And I want to force myself to focus and take good entries. That's some pretty modest goals, aren't they? And you know what? Say you made your $100 for the day, whatever, $150, whatever your modest goal is, and you go into sim and you miss a big 30 tick run. Does it matter? I mean, does it really matter? No, right? I mean, think about the scenario that some of you go through. I know a lot. I know a lot of you do here, and some people listening on this recording is, you know, the market opens, you catch a good little run, you're up 100, 100 and a quarter, maybe 200 plus. Right? You caught a little pullback. You got a nice box on. You know, you caught a little a mid-band box. Hey, I'm going to say something too on this, and I don't ever say this, but I'm going to say it anyway. Look, if your thing is mid-band boxes and the market's chopping around and not giving you mid-band boxes like over here, you think you should be trading that chop? If your preferred trade is a mid-band box and you get something like this, should you try to trade it right here? Or how about this scenario? You missed this trade, but we caught this trade in the room, and you put 2 contracts on it, and you made yourself, you know, I don't know, $130, $125, whatever the number is. And now you come over here and you're trying to look for shorts and you're trying to get long again, and it's stopping you out, and you're giving it all back, and now you're down to $5. Now you feel revenge. Dang, I was up, just like every other day. Why do I always give it back? Because you didn't stop. The greed takes over. You're playing with house money. You can take more risk, right? It's not your money. You're up 100. You got 100 to spend. You got 200 to spend. You made 150 bucks. You put 2 contracts on here. You did a nice trade. You're feeling euphoric. You've got that good endorphins are floating around in your mind, and you're feeling good. You're playing with house money. Yeah, you know, Charles, okay, I see it's a little choppy, but, you know, there's some trades here. This thing comes along. I'm going to go ahead and box it. Looks like it's getting a higher low and a swing. It's going to pop. Fills you. You're feeling good. It pops up. A couple of ticks. You're thinking you're going to get the scalp off. Bam. Takes you out. Full stop out. Not only did you give the 150 back, now you're down 25 bucks. Right? So we've got to make some changes. You don't even need to get to your goal to stop. I mean, I think if you could just set some very modest goals and just say to yourself, because the focus right now should not be on the money. I've said that a million times. I know some of you have heard it a million times out of me. It should be finding good trade entries. That's what this is all about. Your sole focus should be on this right now. Finding good trade entries. Finding the right instrument to trade. Locking down a modest amount of coin when you have it. Don't worry about what happens next. You've made your money. You've hit your modest goal. Because I'm telling you right now, if you can get your win percentage, your trade entry win percentage up anywhere between 65 and 80%, you are ready to go live again and make money. Because you've narrowed down your instrument, you found the good trade entries, you've worked through the fear issues, you know where you should be getting in and what preferred trade type you have, and you know what you do? You ignore the rest. Ignore it. It doesn't matter. Right? It doesn't matter. It doesn't matter. The rest doesn't matter. Yeah, that's what happens, Lee. You get that a lot of times on NASDAQ you know, I've noticed this, because I trade NASDAQ a lot, you know, you know, you'll get some nice moves. You get a nice trend move. Here we got a nice sell-off. You know, it was weak, came down, hit up, rolled over, and then it runs back up. So the whole morning, the whole day is peppered with sessions of nice trend moves up and down, big spikes. You want to try to catch a chunk of them to make some money, and then the rest, chippy chopperoo. So being able to quickly discern what mode you're in is very, very important, right? Generally speaking, I don't trade after about 8 o'clock. When we close the room, I'm usually done. So in one sense, it's good because I avoided all that choppy mess and a head fake right here, right? And then you might say, well, Charles, look at those huge runs that came at 11 o'clock. Do I care? No. No, you don't only know when it after it happens, JC. You don't. You don't only know. You don't know it after it happens. I get that all the time, especially with new people. You can know you don't know something ahead of time, but you can have an educated guess on what's going to happen and where it's going to go, and then you can plan accordingly. I think that's the problem with that I've seen. Here, let's pull a couple more charts up before we wrap. We do it every day in the room. I mean, when we're doing a call, let's say a market's down at a certain level and we say, I'm going to take a short when it rolls over up at this level. Is that doing it in real time, or is that doing it after the fact? I mean, just listen in the room. We do it for 2 hours every morning. All right, let's do a couple together. Let's do YM. Let's do a couple on YM. Let's do a couple together here before we run out of time. Okay, ready? Let's do a few together. Let's practice a couple together. Okay, here we have a sell-off on the right-hand side of YM. This was later in the morning today. In fact, it was very near to the close. Now, if this market is going, if YM is going to retrace, where might it go to? And when it gets there, what will we do if and when it got there? So JC, speaking to your issue, this is how you look forward. Yeah, no, you're right. Yeah, it's easy to armchair quarterback stuff right now. Yeah, we can look back and say that was chop and that was a trend. Yeah, right. But how do we do it in real time? So if this market retraces, YM's down here, certainly we know this is the thrust part of the move. The market's heading down. So I'll help you with half the question. You're looking for shorts. But we're retracement traders, so it needs to pull back. That's why in the room you hear all the time, I need it to pull back to ba-ba-ba. And there's usually a number or some area associated with what we're going to do. That's the forward-looking piece of how we trade, right? That's how you deal with real time. You have to be forward-looking. You can't be retroactively. You can retroactively look back for, excuse me, looking back would help, of course, with support and resistance areas. So here, let's put a couple right on the chart to help you out. I think we all would agree it looks like there's some swings kind of right in here. There's another one up here. We all put our lines on our charts. We know to do that, right? So when we put 2 lines on a chart in a downtrend, we're saying what? Before it happens. The first part of the answer is obviously I'm looking to take a short because this is a downtrend. I'm looking for a retracement. And the third part is we have to look for it to come to some kind of resistance level. And so where would the resistance levels be located? There's one right up in here. Can you see all these predictors in the swing? See it? See the predictors? See the swings? And you have another one up here. All right, so let's advance it. Let me blow it up and advance it. Let's do a couple of these together. Let's pretend we're in real time. Let's pretend this is tomorrow morning. So here's the thing, and I think this is the second part of the confidence, fear, loss, entry issue, is there's not enough planning ahead. A lot of us are, I think, would admittedly say you're more in reaction mode. Is that fair to say? We're in reaction mode. We wait for something to happen somewhere on a chart, and then if and when it does anything, maybe I'll react. If I'm describing you, you got to change. You got to change that like now, because you're never going to make any money if that's the way you're trading. All right, straight up. If you're just in reactionary mode and you're sort of willy-nilly paying attention to where these swings are, and you're kind of thinking to yourself, well, you know, wherever it gets up there, I'll hit the button and do something, I guess. I don't know. You are going to lose money. You're going to keep losing money. You have to think forward. Markets are always marching forward, and you've got to march along with them. You've got to have a plan ahead of time. You've got to be saying to yourself, looking forward, when the market is all the way down here, I want to short it. It's a downtrend, and I need a retracement, and I'm going to be looking right up in here as my sweet spot. If it breaks that, I'm going to look up in here. Right? Let's advance the chart. All right, we're bumping along the bottom. coming up. What happened on that candle right there? What is happening right now on this chart? Right now with these bars. Here, I'll give you a couple more bars. These bars. What are they doing? Here, I'll play it back. Now remember, ahead of time, before the retracement even began, we had our sweet spot identified to do what? To get short. And the bars are doing what? Right here. Right here, these bars right here. They are hitting the sweet spot of your short. So tomorrow, when you get a trade set up and you've looked ahead on your chart, you put the line you're looking for, you're following along, you're listening on your chosen instrument, you're trading YM, you're hearing calls, somebody is saying in the room, a roll off of a mid-band anywhere around 78 was going to get me short. Are you just going to sit around and stare at the chart if that's your chosen instrument and you're tracking it for the day? Or should you put a line on there and get ready to take a short when it hits it? Or are you going to hesitate until it gets all the way down? It spent quite a bit of time up here. I mean, at what point when it hit this swing up here did you want to get short? Here? 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 Or do you need it to get all the way down to here to get in? You want to see that. You want to be convinced it's breaking down and then you're going to get in, right? Yellow bars at the mid-band just means that it's consolidating. That's all that means. Each one of these, what would you consider the roll? Well, it depends on what method of entry you select. If you were looking for an entry, if you had Object Trader turned on, so there's several types of entries here. Let me just quickly outline them. I'll cover them and then we'll wrap, okay? If you do the retracement ray or line trade and you drew it tight like that, probably this bar got you in. If you had Object Trader initialized with a bar close and you turned it on, say you turned it on here, Object Trader with bar close was initialized. In this case, under that scenario, you would be filled short on this bar. If you drew a box short only and the box looked like this, then you were filled short on this bar right here. Now this, if you had done this initial box here, and you got in one of these different ways, bar close, line trade, ray trade, box, then this is one of those scenarios where you went through a little roller coaster, right? You feel a little bit of euphoria, you're up a couple of ticks, comes back, you're upside down a couple of ticks, goes back down, another swing low a little bit further, you're up a couple of more ticks. Maybe it got your target on your scalp, maybe it didn't. Comes back up, maybe comes real close to stopping you out, or maybe this stopped you out, and then you get back in over here. You could rebox it. This happens. Sometimes you stop out and you have to rebox to get back in. Maybe you reboxed it right there, and you got back in on the close of this bar. So there's a lot of different scenarios that could have played out here. The point being is that you have to realize that you're looking to short this, and you have to use the tools to get in, and then eventually what's going to happen is she breaks down, and you get a decent trade out of it. Yeah, this was a challenging area, no question about it. No question about it. That was a challenging area to trade. Every time it hit up near the mid-band, it did roll, though. Yeah. All right, are we set with our plan? Any questions? I'm going to stop the recorder. Final questions before we wrap.